Let's try to understand finances of any company without having a finance degree, starting with the income statement, margins, balance sheet, cash flow and free cash flow, and then finally the 6 numbers to check before you invest in any company. In simple terms, the income statement answers one simple question: did the company make any money or not? So while you are reading the income statement, start at revenue, which is often called the top line, then move down through the expenses until you reach net income, which is called the bottom line. Let's try to understand with an example. Imagine a business earns $100 in revenue and reports $20 in net income. Its net margin is 20%. That means $20 of every $100 in sales remained as net profit. Now compare that margin over several years. Is the business becoming more efficient, or are costs rising faster than revenue? That gives us some basic understanding about the analysis. Now moving on to the next one. That is margins. Margins show how much of every sales dollar remains after the company pays its cost. So the second statement is the balance sheet. It shows what the company owns and what it owes at a specific date. Assets include cash, investments, inventory, buildings, money owed by customers. And liability includes debt, bills, leases, and other obligations. So while you try to understand all these steps, that eventually leads us to the next step, and that is the balance sheet. The balance sheet of a company shows what a company owns and what it owes on one specific date. So for a beginner, compare cash and investments with debt. A company with $30 billion in cash and $10 billion in debt has a different risk profile from a company with $3 billion in cash and $30 billion in debt. The industry also matters because banks, utilities and industrial companies uses more debt compared to the companies which are not too much into debt heavy. So this point can stand on its own, but it becomes more useful when you connect this point with the next analysis, that's cash flow and free cash flow. A company can report high profit and still have weak cash flow, which is why the cash flow statement matters a lot. The third statement is the cash flow statement. It explains how cash moved through the business. Operating cash flow shows the cash produced by normal operations. Capital expenditures shows how much company spent on property, equipment, data, entries, stores or other long-term assets. And if you want to calculate, free cash flow is simply calculated by subtracting capital expenditures from operating cash flow. For example, if operating cash flow is $25 billion and capital expenditure is $8 billion, free cash flow is approximately $17 billion. That cash may be used for growth, debt payments, dividends, share purchases or even acquisitions. If you understand all these 4 points, the next one is directly built on that, and that is the 6 numbers to check before you study about any company. And while you read balance sheet, it becomes overwhelming because there are so many different ratios, but start with the same 6 numbers every time, so it becomes very simple and very easy for you. The 6 numbers I would check first are revenue growth, gross margins, net margin, cash, debt and free cash flow. These 6 numbers do not give a complete answer, but they quickly show whether the company is growing, profitable, financially flexible and producing cash or not. And at last, one very important reminder: accounting numbers need context. A failing margin may be a warning, or it may reflect temporarily as investment in a new product. Higher debt may be dangerous, or it may fund an asset that produces reliable cash flow. So the numbers tell you where to ask questions. They do not answer every question which you may have. Now remember that the income statement shows profit, the balance sheet shows financial position, and cash flow statement shows actual cash movement. Start with same 6 numbers every time. If you want to understand each of these steps in a very simplified way, I have created a website that is called the Stocks School. You can go and find all these information in a very simplified steps, and that will help you to be better educated at stocks.